Hello, my name is Heather Getzinger, and this is my final project for CIS 3367 at Baruch College with Professor Adrian Wheeler. Before I begin describing it for you, I'd like to share some pertinent information about me. As you may know, I am planning to move to Los Angeles, California next summer. However, what you may not know is that I am a passionate enophile. I absolutely adore everything about wine, tasting it, learning about it, and maybe one day selling it in my very own wine shop. So for this project, I thought it would be fun to concoct an income statement and a detailed inventory list with accompanying sales and profits for my future wine shop, and then analyze them using GoalSeek and Solver. So as you can see, this is my income statement. All of the data on it were made up by yours truly, but I did make sure to follow the basic rules of how an income statement ought to be structured when I set it up. So for example, here you can see that the gross profit or loss has been set up as the difference between net sales and cost of goods sold, and that in turn my operating income has been set up as the difference between gross profit or loss and operating expenses. I will be demonstrating the use of the Solver add-in on my next worksheet, but since an income statement on its own is pretty straightforward, I personally found the GoalSeek tool to be a much more efficient way to manipulate the variables. So in this scenario, my net income for the period, let's just call it a year, was $94,000. But let's say that I wanted to try to increase that figure to $125,000. By using GoalSeek, I can see what my gross sales would need to be in order to achieve this result. So what I do is I go over here to What If Analysis and click on GoalSeek. And as you can see, my set cell has been correctly set as E22, net income. And then for to value, I'm going to enter my objective of 125,000. And I'm going to tell it to do this by changing cell E1, which represents gross sales. So we hit OK. And look at that. All of the data in my income statement has shifted to reflect the new information. As you can see, I would need to increase my gross sales by $31,000 in order to achieve my goal, assuming that there would be no change in my cost of goods sold, operating expenses, or taxes. And this is a simple but powerful way in which Excel can be used to make accurate forecasts. So now let's move on to my inventory and profits worksheet. Scroll up for you. As you can see, my shop carries only domestic wines from 4 of the United States' most prominent wine-growing regions: Napa Valley, California, the Finger Lakes region in upstate New York, the North Fork of Long Island, and the Willamette Valley in Oregon. Once again, all of the data on here were invented by me. However, not only is my total profits figure seen here the same as my gross sales on my income statement, $500,000, but I also made a sincere attempt at verisimilitude, that's a hard word, by accurately representing the wines that are most commonly grown in each region. The most obvious example of this can be seen in the case of ice wine, which, as you can see, I only stock ice wine from the Finger Lakes, and the reason for this is that it's produced using frozen grapes on the vine and thus can't grow in any of the other 3 regions. And another example is Cabernet Franc, which is heavily emphasized in the North Fork. So and et cetera, et cetera. I really tried to make accurate representations. So while the data you see here is fictitious, it was not completely chosen at random. I took pains to ensure that this scenario would be plausible in the real world. So as I'm now going to demonstrate, my inventory sold is the same as my quantity sold per region added up. And I also made sure that my quantity sold per region for each region is less than my total inventory. So as I said, it's not just a bunch of random numbers. So as you can see, my LA customers strongly prefer West Coast wine, and my New York State picks did not perform as expected. But clearly I had a feeling that this might be the case and increased the markup on my California and Oregon wines, since I knew that my customers would likely be willing to pay more for them. However, the final result was nonetheless a bit disappointing, and as such it would probably be best for me to see how I ought to go about maximizing my profits, and for that we will use the Solver tool. So for this exercise, we're going to set cell C25, which is total profits. We're going to set it to maximum, and we're going to tell it to change the variable cells C22 through F22, which are the total quantities sold per region. Now, obviously, in the real world, I would need to drill down much more deeply than this, given that all of the wines would be priced differently, but I think this will suffice for the purposes of this exercise. So moving forward, as you can see, I've set some constraints, namely that my inventory left and my quantities sold per region need to be greater than or equal to 0, because obviously I can't sell negative bottles or have negative inventory. And I also set an upper limit here in C23, my total quantity sold. I set the upper limit to 102,000, and the reason I chose that number is because last year my total inventory was 101,595, and shelf space is already quite scarce, but I figure that with some creative rearranging I can make room for 102,000 bottles. But so let's see what Solver has to say about this. Okay, so unsurprisingly, it's telling me to stock my shelves to have all 102,000 bottles be from my high profit California wine, to just sell California wine and forget about the other 3 regions. And while that may be most practical from a strictly monetary standpoint, let's say that I'm thinking more long term. I believe that the market for New York wine in LA is untapped, and that with the right business and marketing strategies, I will be able to increase these wines' popularity over time. So given that I've chosen to pursue a gradual growth strategy, let's cancel these results and use Solver to determine my best course of action for achieving a smaller financial goal. So instead of maximizing my profits, let's say that my goal is simply a 20% increase from $500,000 to $600,000. With the same constraints in place, let's see what happens now. And please be sure to keep your eyes on rows C22 through F22 while I do this. So ready? 1, 2, 3. Wow. Quite a difference. Although it is still recommending that I heavily emphasize California wines, Solver has shown me the precise mix of bottles that I need to sell in order to achieve my $600,000 profit goal. Also, if let's say my marketing efforts led to an increased demand for ice wine and my profits per bottle for the Finger Lakes went up. So here, let me demonstrate this for you. Okay, so now let's say my markup is higher. When I run Solver again, well, exact same constraints. Look, it instantly takes this into account. A new mix, just like that. So this completes my demonstration of my project, which I hope you found enjoyable and informative. And for me, this was a chance to really get my hands dirty in terms of exploring how Solver can be used to quickly ascertain what needs to be done in order to achieve a desired result while taking into account a variety of interrelated factors, as is nearly always the case in any real-world business scenario. And I'm sure that Solver and I will be meeting again in the future, perhaps even to assist me in running a real wine shop someday. This is Heather Getzinger signing off. Thanks for listening. Bye.